I'm going to share with you a secret to investing where you never have to take a loss, and the likelihood of you making money is 100%.
Well, holy smokers, this ain't no jokers. Today in this video, I am going to tell you why I believe I am going to well over 10x my money in TTCF stock, Tattooed Chef. Well, folks, it's official. I have sold all my TTCF stock, and that's why I've taken over a $1 million loss in this stock.
Today, folks, that's right, we're taking a look at a clown that lost over $1 million, basically just gambling in the stock market, and somebody who I continue to believe pretty much just speculates on the market. We're going to take a look at what a real portfolio looks like from experienced investors, and the only reason I can call Jeremy a clown, a gambling addict, is because I'm a clown. I'm not a gambling addict. I try my best not to be, but I am a clown. I was a full-time magician for over a decade. I don't know how I got into the financial space, and I don't know how I found more success than pretty much any YouTuber that exists on this platform, but we'll break this down in pieces, not to stroke my ego too much. Don't listen to anything I say, something Jeremy never says in his videos anymore. He doesn't offer any disclaimers. I mean, the guy is disclaimer free. I'm surprised he doesn't have regulatory SEC a-holes coming down his throat. But obviously, we're going to talk about this in a video. If you haven't seen it here, guys, let's just do some highlights. I just want to offer some insight. It's crazy how long his videos were just promoting Tattooed Chef to the moon, but when it comes to losing $1 million, we'll just brush it off in a 5-minute video here, and let's just break it down in pieces. There's a lot of insightful things we can learn from this.
Well, folks, it's official. I have sold all my TTCF stock. Yes, I have indeed. I've given this management team time and time again, chance after chance, and just to be let down and let down. And today was the day. It's finally time to cut it all loose. And so that's exactly what I did, okay? A few things I want to share in this video, and I hope this helps out folks avoid a problem like I got into, obviously, with this stock and taking a massive, massive loss. First thing I want to say is I was wrong. I was wrong in regards to the entire plant-based food movement. I thought this was going to become a massive, massive thing in the...
I think he's wrong in general on making such concentrated, incredibly speculative investments here. When you look at real investors, they're looking for companies that have been around for 50, 100 plus years, have massive moats, have a continued history into the future. And we're going to talk about that with Warren Buffett and the fear and the way those guys invest compare to a gambling addict here. And don't get me wrong, I was somebody that was a lot more speculative in the market when Jeremy was as well, between that 2019 to 2021 and the 2021 period, because the gains you were making in everything from NFTs and Pokemon cards, small cap companies, large cap stocks, the NASDAQ, like it was just so obscene that if you weren't kind of getting a piece of that, like you just didn't experience any real returns out of the market here. And I got out, I ran, I was so terrified of that market. I was very hyped, and I mean, I was trying to take it to the moon with everyone else, but I was very diversified in the way I was doing so. And I recognized that all these new industries, like he got into Voyager Digital, Planet 13, the MJ market, when you're talking about the plant-based food market, all of those basically went to zero for him. Like they were so speculative, they didn't follow any real, OG investor advice, I'm going to say, which again comes back to the point of speculating, playing the roulette wheel. We'll talk more about the gambling addiction in a moment.
As more times ticked on, the more I've come to the conclusion that the plant-based food movement is kind of a niche thing. The vegan movement, the whole deal. In 2020, 2021, there was massive amounts of people trying vegan diets, plant-based food diets, and I really thought that trend was going to continue. Now I go into my favorite plant-based or vegan restaurants here in Vegas, and they're ghost towns. I took my family last weekend to one of our favorite vegan restaurants, and it was a ghost town in that place. I mean, literally, I think there might have been one other customer, and this was at 5:30 on a Saturday.
He's not wrong here though either, right? Like plant-based food was in McDonald's, Tim Hortons. Now like you can't find that on any of their menus anymore. It was really this hype cycle. It was a really intriguing phase in the food industry, but people are lazy, man. People are utterly lazy and will always revert back to whatever tastes the best, whatever is just easy and convenient, and that's just not plant-based food, unfortunately.
I go to Texas Roadhouse and there's an hour wait. I go to Cheesecake Factory and there's an hour wait. And so nonetheless, folks, I think I was wrong about the whole vegan movement, the plant-based food movement, and that needs to be said, okay? Second thing is, so a lot we can take from this. I've always had a saying that if you're gonna bet on an unprofitable stock, you bet small. I did not listen to my own advice, and that's why I've taken over a $1 million loss in this stock. I didn't even listen to my own advice on that. The bottom line is if you ever buy an unprofitable stock, understand it's a speculative position. Keep the position sizing small. So then if you're wrong, it's a small loss. Not a
See, this is the funny thing too, because he's like, "Oh, just bet small," but you're not really betting small when you're just betting on all these individual stocks, and your whole portfolio is basically speculative investments. Because even cash flow positive investments can still be highly speculative in nature, because sometimes the valuations are out of whack. And valuations in a market like this are pure fugazi. I'm going to explain to you why toward the end of this video, that even good companies can just completely go into the toilet in a market like this and never recover. I mean, literally never recover. People keep forgetting examples in the market here. Like I can even show you like Micron, a company that you can go all the way back to 1990s and is only up 41% from the peaks, right? And even if you bought the dips, like you better have been buying these big dips and you'd have been holding for years and years and years without seeing any kinds of return. This could happen to any company, right? Like any company could hit an all-time high and then flatline for the entirety of its business moving forward. I mean, the markets in an individual basis is something very hard and unpredictable. So it's just funny that he's like, oh, well, just, mitigate the risk. My idea of mitigating risk that everybody seems to have a general rule of thumb in the smart investing community is like you generally want to be very diversified in large cap cash flowing companies, or primarily just ETFs, broad-based ETFs, and then you basically make no more than 10% of your portfolio individual speculative investments. And I still buy small cap investments. I still have that gambling addiction. Most people can't live without it. The point is you need to make it the smallest portion of your portfolio and take the path of least resistance to generating wealth, or you're going to end up in his position here where you're just going to lose obscene amounts of money.
a huge loss. This should have been a 50K loss for me, a 100K loss, not $1 million plus loss. Second thing is, I've always said be careful of unproven management teams, and I totally overlooked that in this investment, and I decided to bet heavy on an unproven management team. The fact is that
this really comes back to Warren Buffett's advice. Management team doesn't mean anything. If you're buying a real company that has a real moat, as Warren Buffett says, eventually an idiot's going to be managing it. So you need to have a company that's so good, even an idiot can manage it. And so this advice is just dumb.
Third thing is, am I embarrassed? I'm not embarrassed about taking a loss in the stock. Like if I buy 10 stocks,
I would be.
I'm always I'm going to take a loss on likely at least 2 of those 10 stocks, if not 3. It's not a game when you're an investor. It's not a game.
Only on 2 of those 10 stocks. I think we've been taking a lot of losses on a lot more than 2 of 10 of our stocks, which we might as well get into here in a sec, folks. Let's just finish a little bit more of this.
Game where like you're going to bat 100%. That's not the way this works. I wish it was that way, but it's not. You're always going to take losses. So I'm not embarrassed by taking a loss.
I'm going to share with you a secret to investing where you never have to take a loss, and the likelihood of you making money is 100%. I know that sounds impossible, but I'm going to share with you this little tidbit of secret advice that Jeremy just never kind of resolves to.
I am embarrassed by the size of the loss. To take over a $1 million loss in this stock, that's embarrassing for me. That just shows that I was completely delusional and gambling in this situation. And that for me is always the most disappointing thing. And fourth thing is tax loss harvesting. Obviously, I'll be able to write this one off for
everyone
at least
always
2 to
falls
4
back
years.
on that.
So all the gains I take this year, next year on stocks, the year after, I'll be able to obviously write those off against this tattoo shelf loss for a while, at least.
Could you imagine losing so much money that you're like, hey, it doesn't matter. All the money I make in the future, it won't even count as gains. I've lost so much money that in the future, I can make all the gains I want tax-free.
2 to 4 years here in this situation, okay? Now, what I did with the money, here's what I went ahead and bought here today. I bought Revolve.
Well, the guy continues to gamble. He continues to throw it into some smaller cap companies. He continues to buy like the exact opposite of what I think real good companies are. And I think he continues to speculate and gamble. I'm going to break this down because, these are what he's buying. Skyworks, Amazon. I mean, you can see PayPal, which I think PayPal is undervalued. But again, from a speculative standpoint, Palantir, which I think is highly speculative, extremely an expensive company to buy. I mean, it's really expensive to buy at these prices. And anybody that's an investor knows that the real money is probably not going to be made at least until 2027, 2030. And anything in between is just speculative hype, which is what Jeremy makes his money on. I mean, Jeremy's a guy that after he promotes losing a crap ton of money to try and revitalize his audience and make sure everybody knows that he's a true investor, is he'll always post a portfolio video right after he posts all this money I've lost, but hey, I've got millions of dollars. You don't. I know what I'm doing. I can afford $1 million losses. You're a loser. I'm a king. I'm a champ. And taking a look at his king champ portfolio here, it literally looks like a roulette wheel. I think it's kind of crazy that if you really want to understand like how scary it is investing the way Jeremy's invested is that all of his money came from Tesla. We kind of got to point out the fact that his entire portfolio is only up 21.79%. And if you wiped out the Tesla gains that he had, he would have made no money. He would have been down dramatically a lot more than he currently is. So I think it's prudent for most investors to realize that, like, for a guy that's like, oh, well, I expect to lose money on a few of them. No. He's lost money on almost all of them. And if it wasn't for that one freaking stock, which if he missed out on Tesla, if that was the only company he missed out on, he would probably be substantially more in the red. And if there's something that I want to show you before I show you how to make real money in the market without losing anything, and this is something that I wish more YouTubers would do. Now, do keep in mind, I am more appreciative of his current portfolio because they're definitely better companies, but because he's just buying this weird portfolio of just diversified, like, I mean, look at Planet 13, it's down 70%. Look at Oatly, 39%. I mean, you look at, it's literally a roulette wheel. I win some here, I lose some there. I win some here, and if I didn't get that big lotto ticket, I would have lost all of it anyways, the vast majority of it. But nonetheless, like, I wish Jeremy and every YouTuber, when they talk about their portfolio, they just show one thing that I'm going to share with you here. This is where my ego kind of comes from, is that I've been very good at getting in and out of the hype plays, and I recognize them for what they were. In fact, like, some of my biggest gains were in the MJ market before legalization. I caught that trend early. Tesla I caught early. The speculative market with things like MindMed I caught early, and I made some bad mistakes with things like Geo Group. I tried to get into the space industry a little too early during the hype of the bubble here, and we're going to see that in these accounts. But this is my TFSA, right, against the S&P and the NASDAQ. I opened my TFSA in July of 2017, and this account's up 155%, doubling the performance pretty much of the S&P and well outpacing the NASDAQ, right? Here's my longest standing account, the first account I ever started back in September of 2014. This account's up 309%, my most speculative account. Keep in mind, at the peak, it was up 410%. Against the S&P today, it's up 309%. The S&P's up 108. The NASDAQ's up 166. I'm still doubling the NASDAQ performance in this account. When we take a look at, say, my RRSP, my best standing account, I started this in 2019. It's up 239%. The S&P's up 39%. The NASDAQ's, I'm crushing the performance because when I get into investments, I make really mitigated investments in things like Tesla, right? Like, they won't make up more than 10% of my portfolio, but when they explode in value, I'm just constantly nursing that money off. Like, I'm selling it all the way up, and then as soon as I get a little worried that the market's not going to be in a place of stability for these hype companies, I'm getting out. I'm not staying into these things, and I'm always putting that money into long-term sustainable investments. The path of least resistance for everybody should have in their portfolio to some varying degree is large cap ETFs, baby. I mean, broad-based, beautiful companies. Let something passively weight them based off market cap value, because that's what pretty much all real investors have done. Because over a 20-year period, you would have never lost money in an S&P 500 index, and over the long term, your average rate of return has been over 10% before inflation. And I mean, you run that on a compound calculator, it's really easy to become a millionaire if you're saving 50% of your 50% of your income. I mean, within 10 to 20 years, you'll be loaded. You'll be financially free. It's something that Jeremy will not tell you because he wants you to speculate alongside with him. But he makes all of his money off YouTube. The guy's multi-millionaire from YouTube, from his Patreon. He makes more money than you ever will in a year, probably for the next 5 or 10 years, which means you should probably focus more on your business and generating wealth than you should be speculating on some of these companies, right? And if you are going to speculate like I do, I still speculate on small caps. You just got to really make sure you have the emotional fortitude, which I don't think Jeremy has. And if you can't do that, don't be doing it. You got to recognize your own downfalls. But look at Ray Dalio's portfolio. Here's a legend, which Jeremy will never be, in my opinion, the way he invests. But here is a legend investor, and his number one investment is basically an S&P 500 index. There's one S&P, there's another S&P 500 index. He's got emerging market indexes, companies that are undisruptible, that are truly recession-proof. Procter & Gamble, Pepsi, J&J, companies that I absolutely adore, that I absolutely love. You got McDonald's in here. You take a look at somebody like Warren Buffett, a guy that is so terrified of this market. Like, this guy is buying Japanese companies that are commodity traders. I mean, things that you'll never hear Jeremy talk about. Jeremy's never going to talk about, OG, really recession-proof, as Buffett says. Our portfolio will be the last one standing by the end of the market, the end of, if the entire world falls apart. Buffett wants his portfolio to be the last one around. Not something Jeremy will ever say. Jeremy needs to trade. Jeremy is a swing trader, and largely I have been as well. I mean, that you have to recognize that it's a different investment strategy. But in the back of my mind, this is what I'm going to always. I'm always taking all my gains trying to avoid the losses and just shoveling it into these path again of least resistance to wealth. And Buffett's buying things like Apple, Bank of America, oil companies, just really moated companies. And if you scroll down, I mean, even Buffett in his portfolio here, if you scroll far enough, guess what you're going to see? An S&P 500 ETF. These OG guys, they always just seem to go back to the good old S&P 500, right? But on that note, folks, like I said, I'm not trying to gloat. Well, I am trying to gloat a little bit here, because I just want people to recognize that so many YouTubers have come and gone. I think so many people have lost such extreme amounts of wealth through the last few years, and they don't know what to do, and they're truly lost. And that's why I always try and do portfolio reveals and show you guys that, I've shifted a lot too. You go look at my portfolio when I started investing was purely individual stocks, mostly large caps, always, the world-renowned companies. As I've always believed, if you just invested in the largest cap companies, it'd be hard to do pretty bad over a long period of time. And then during this market cycle, I've been so terrified because numbers don't make sense. PayPal, doesn't matter if you post good earnings, your stock can still go down, and when it recovers, nobody actually knows. It's just a loop right now. The market's pure fugazi in the short term, and the long term, buying speculative investments like Jeremy doesn't mean it's going to work out. And I still think what he's doing is relatively speculative, but that's just my opinion, and I'll pass that off to you. I'd love to know what you guys think about this in that comment section below.